Vehicles are one of the main areas that the IRS brings up in audits because it's one of the most abused deductions out there. A vehicle would be the second major purchase that most people make on average after their home, so it's a pretty significant purchase, and it sounds good to say that you can write it off and then it becomes free. But number one, that's not how deductions work in general. And number two, that's especially not how vehicle deductions work because there are specific rules to getting the business deductions for your vehicle. We're going to break this video up into two parts. Let's first talk about some incorrect information that's commonly brought up on the internet, then talk about how to do this the correct way with all the documentation that you will need to be confident about the vehicle deduction you claim for your business. Now, before we head into the video, my name is Jonathan and I am a licensed enrolled agent and CEO of Reserve Tax Advisors. If you're making $300,000 or more and are tired of handing 2 to 3 months worth of income to the IRS, I want you to realize that you don't have to do that, and there's something you can actually do about it to change it, but you need to take action. Just thinking about it is not going to bring the change that you're looking for. Reserve Tax Advisors specialize in lowering the tax bill with proven results from our strategic tax planning and entity optimization strategies that has saved clients anywhere from $20,000 to even $150,000 in taxes. If you're ready to take the driver's seat for your taxes and take control and keep your hard-earned money in your pocket where it belongs, schedule a consultation and we'll show you exactly how we can help you achieve that. The link will be in the description. Now back to the video. Your vehicle can be a real deduction for your business, but there are specific rules that most business owners do not follow, which makes it very easy for an IRS audit to reverse the vehicle deduction, which will result in you owing more in taxes, penalties, and interest. You don't want to be in that position in the first place, so following the specific rules and doing this correctly the first time is crucial for any current and future vehicle deduction. Now, let's start with some incorrect information that has spread like fire on social media. One thing I see a lot on social media is that you can write off your car if you put your business logo on it. Let me just start this off by saying that this is just wrong, period. People on social media think that they can write off their car just by sticking a logo on the side of it, but that has nothing to do with being able to take the deduction because the logo on the vehicle doesn't mean that the vehicle is being used for business purposes. This would be like sticking a logo on your front door of your house and saying it's eligible to be written off for business purposes. It's not the logo that determines the business use, but what the actual purpose and intent of the vehicle is that determines the eligibility of the deduction. Now, number two, fully writing off every car over 6,000 pounds. This is a big one, especially on social media where you have everyone talking about buying a vehicle over 6,000 pounds because you get to write it off completely with Section 179. This is very misleading because while that is somewhat true, that's not the entirety of what the actual tax code says. The tax code splits vehicles into two separate categories. You have your car and then you have your truck or van. These two categories of vehicles have a different 6,000 pound test that it must pass in order to depreciate the vehicle without any limits. That's what most people on social media don't mention because they probably don't know that there are different 6,000 pound tests for each vehicle. If a vehicle is classified as a car, the 6,000 pound test is based on the unloaded gross weight, or sometimes called curb weight or empty weight, while a truck or van is based on the loaded gross weight, which can make a huge difference. So the next time you hear someone say that they're writing off their entire vehicle because it weighs over 6,000 pounds, you should be asking them, is it 6,000 pounds unloaded gross weight or is it 6,000 pounds loaded gross weight? That's going to make all the difference for if they're actually eligible to write off the vehicle in full without the Section 280F limitations. Now, number three is not thinking about heavy SUV limitations. Again, this is one of those things that people on social media completely disregard because they probably don't know that there are separate limitations for heavy SUVs. As mentioned in the previous point, not all vehicles are eligible for a full deduction, which includes the infamous SUV that you see everyone talking about. This would be your Range Rovers, your G-wagons, your Urus, and so on. An SUV can pass the 6,000 pound loaded gross weight test, but did you know that there is a Section 179 limitation for heavy SUVs? Again, one of those areas that people on social media completely disregard. For SUVs that are over 6,000 pounds but under 14,000 pounds loaded gross weight, Section 179 has a separate limitation, which is around 31,300 for 2025. This limitation specifically limits the Section 179 deduction for heavy SUVs, which is important to keep in mind. The vehicles that are actually eligible to be written off fully without any limitations would be non-passenger vehicles. This would be your heavy pickup trucks with a cargo bed of at least 6 feet, your cargo vans, and vehicles that seat more than 9 passengers are some examples of non-passenger vehicles that have no limitations. Now, number 4 is thinking bonus depreciation is always 100%. There are a lot of people out there that think that bonus depreciation is always 100% when taken, but that's not correct. IRC 168K says that bonus depreciation is 100% if the vehicle was acquired and placed in service after January 19, 2025. Now, this is thanks to the reinstatement of the 100% bonus depreciation by the One Big Beautiful Bill Act, which reinstated bonus depreciation to be 100% after the January 19 cutoff date. This would mean that if the vehicle was acquired and placed into service in 2023, 2024, or even in 2025 before January 19th, the vehicle is subject to reduced bonus depreciation rates and would not qualify for the current 100% bonus depreciation. Now, number 5 is thinking that a write-off means the vehicle is free. In the case where you are eligible and are able to write off the vehicle in full, it absolutely does not mean that it's free. You're still spending money to acquire the vehicle, and the write-off doesn't give you that entire amount back as a refund either. A write-off simply means that your business receives a deduction for the vehicle against the income of the business. Now, to understand this a little bit better, this would mean that if your business had $100,000 in income, a $50,000 vehicle deduction would mean that it brings your business income down to $50,000. You're not going to be getting a $50,000 refund from the IRS. So buying a vehicle to lower your taxes, especially if you don't need the vehicle in the first place, is one of the worst things you can do. You're still paying tens of thousands of dollars for the vehicle, and the vehicle write-off simply accelerates the rate of which you get to deduct the vehicle. It doesn't even come close to getting back $50,000 on your taxes. So don't fall for that advice on social media that advises that you buy vehicles to lower your taxes. It's just dead wrong, okay? Now that we clarified all of this incorrect information that you see on social media, let's talk about some things that you need to do correctly in order to take any vehicle deductions or depreciation with confidence. Documentation is key. So in court, you're innocent until proven guilty, but in an IRS audit, it's just the opposite. If you get audited, the burden is on you to prove the deductions were legitimate in order to keep them. Vehicle deductions, again, are one of the most abused deductions out there. So the IRS will look at vehicle deductions very closely and will conduct an audit if something just doesn't look quite right. Now, an audit doesn't necessarily mean that you made a mistake, but it's rather the IRS wanting to confirm some items on your return. However, even if you don't have any errors on your return, an audit costs time, money, and effort to defend. So it's better to not be in that situation in the first place by making the vehicle deductions you claim on your return are reasonable and you don't open yourself up to exposure. Here are some general records to keep when it comes to vehicle deductions. Mileage. If you're driving for business purposes, tracking mileage and the description of the drive is crucial to have for documentation purposes. You can use apps like MileIQ to do this to make it as easy as possible. Receipts. Any vehicle-related expenses should have a corresponding receipt. A bank or credit card statement is not sufficient, especially in an audit, as the statement itself will only have the total, but it won't actually show you what was purchased. Any gas, oil changes, windshield replacements, tires, and so on should have a receipt that you keep on file to show at any time. Now, the second thing is allocating vehicle expenses correctly. Many business owners fail to allocate the vehicle expenses correctly, which is one of the easiest ways to get audited and end up having the deductions reversed with additional penalties and fees. You don't want to be in that situation. If you're looking to depreciate your vehicle with an accelerated depreciation method, Section 179 or bonus depreciation, you must use your vehicle for at least 50% of the time for legitimate business purposes. The most common mistake business owners make is meeting the 50% business use requirement but deducting all the expenses to the business. If you use the vehicle for 50% of the time for business use, all related expenses are allocated and deductible to the business by 50%, not the entire amount. In order to deduct the full amount of vehicle expenses, it must be 100% used for business, which in most cases will be a company car that is strictly for the business. If you're using your personal vehicle for business purposes, always remember to allocate the vehicle expenses appropriately and accurately. Now, the third point to keep in mind is using the correct depreciation method. After making the determination as to what kind of vehicle you have, choosing the correct depreciation method is crucial for the overall accuracy and eligibility of the deduction. Is it a passenger vehicle or is it an SUV? Or is it neither? Is there a Section 280F limitation that the vehicle is subject to? Is Section 179 allowed? Is bonus depreciation allowed? Is there a heavy SUV limitation for your vehicle? The depreciation method and allowable limit is based on the classification of the vehicle. So it's important to first realize what classification the vehicle falls under to determine if any Section 280F limitations apply, and if so, how much you're actually limited to. It's also worth noting that once you do choose a depreciation method, you'll be stuck with that method for the useful life of the vehicle, which is 5 years in most cases. While changing the depreciation method is possible, it's not a simple correction where you just check another box. It is considered a change in accounting method, which also requires a Form 3115. And even in the case where the depreciation method was changed, this change will be reflected going forward, as depreciation cannot be changed retroactively even if you amend your return. I want you to realize that vehicles are one of the easiest deductions that taxpayers abuse, so the IRS pays real close attention to any vehicle deductions or depreciation. Now, don't worry, you can protect yourself from all angles just by following the to-dos that we went over in this video, as well as avoiding doing anything that is just wrong information being spread around on social media. If this video has helped you out and you're interested in learning more about how the tax system actually works to use it to your advantage, please leave a like and subscribe to the channel, as it really helps us out a lot. If you have any questions, feel free to leave it down in the comments and I will get to you to clarify any questions that you have to make sure you are confident in what you do for your business deductions for your vehicle. Thanks for watching, and I'll see you on the next one.